Hey, Jonathan from NorthForexTrade.com. Now in this video today, I'm going to be sharing with you how you can easily add your indicator-based strategy with the use of supply and demand. So if you want to learn how to use supply and demand, but combine it with your current strategy that you may already have, by the end of this video, you'll know exactly how you can do that. So now we're going to go over to a price chart. I'm going to go over to the Audi US dollar. We're on a weekly time frame. Now the first thing we need to do is look at the chart, and we're going to draw out those areas of supply and demand first. So where we have this area on the low, we've rallied to the upside, removed a previous high in the charts, this area here. What removed that high was this area of demand. Now, as you can see, the market continues to go higher. We break the next high in the market, which is going to create another area of demand for us. So we have another area of demand, and you can see the market does try to come back, but doesn't quite come back far enough into that demand zone. We then, once again, we rally out, removing this high. We're going to create another area of demand. And so on and so on. So you would look to draw, identify and draw your zones as you've learned on previous videos. Now, if you haven't already seen the video on how to mark, identify and draw those zones, I will leave a link above now so you can go through and watch those videos. Now, based on what we're looking at on the chart, let's just remove everything. What we could then do, we can look at adding an indicator. Now, many of you will perhaps use an EMA. So let's go to the charts, and we're going to add a simple EMA. Let's put in a 20 exponential moving average. Now, what does that now give us? It gives us information we could be in a trend. You can see the market has rallied up, pulled back to test that area on those EMAs and rallied higher. Now you could look at that as what I call an area of dynamic area of support. Now combining that with what you have with supply and demand approach, if you had that as an area of demand on the chart, it's a great area you could look to take a trade. There's an EMA we can add to the chart. Let's go down to a daily, and we're going to go back in time. We can see this area of the trend where we're above that EMA. So we're using the EMA to find that trend in the market. And remember, if you haven't watched that video on how to determine the trends using a supply and demand approach, then you need to go and watch that video. That's up here right now. So go and watch that video after this video so you can understand how you can use supply and demand as well to identify trends. But the main issue is, if say you're using a 20 EMA to look for a trade, when we see these areas of demand being created, it's above that area on the 20 EMA, the market pulls back, where you'll be looking for an entry. Again, the market continues to go higher, creates this area of demand, we then create this area of demand, and you can see the market keeps coming back, and we keep coming back to those areas of demand. Now, with using the EMA as your indicator, you've already identified you're only buying in this market. So you'd only be looking to take a trade with an area of demand. Now that's not including if you're using a top-down analysis, or even if you're using multiple time frames. If you're using a full tradable supply and demand strategy, then you'll be looking at all those things as well as your indicator. So there's one idea of an indicator. What's another idea? Let's remove that EMA, and I'm going to add on some Bollinger Bands. So you may have used and traded with some Bollinger Bands in the past. Let's shrink the chart down. So the Bollinger Bands can act as well as an area of reversal in the market, and where we can have an area of structure when we're looking at a dynamic area like that 20 EMA. Look how the middle band can act as an area of dynamic support. Then we can use the outer bands as an area where we're seeing that reversal. Now I want to just go down to this section of the chart. We just zoom in and go back in time. I want to highlight this area right here, And the reason I'm highlighting this area is because in a future video coming soon, which will be all about the false breakout entry, this is a perfect example of what you're going to learn and how you could capture an entry here using a false breakout. And if you was to apply this with, say, the Bollinger Band on the chart right now, this will give you that added aid when looking to use it. So let's now look with the use of a Bollinger Band. Why will they work well? Well, many traders use Bollinger Bands as reversal points. We're not going to use them as a reversal point. We're going to use it with the trend. If you're taking a trade with the trend, you want to be taking a bounce off the middle band like here, and probably not that second area, but the first area. If that comes in line with an area of demand, as we do here, great opportunity to take a trade. And you can look for a lower time frame entry, or you can look for that set and forget entry. And you can even look to target those previous highs. Now, this is just a simple sample idea how you can use a Bollinger Band. Remember, you can apply this to multiple time frames. Again, if we go to a weekly time frame, you can see how the Bollinger Band respects those previous highs currently. And I know if you go back and look, you'll find a monthly area of supply sits here, and using a Bollinger Band as a reversal with a higher time frame of supply, another strategy you can use with Bollinger Bands. Now, if you like the idea of using Bollinger Bands and want to combine that with the use of supply and demand, and you want to learn more, then leave a comment below and let me know, and I'll perhaps do a video all about the use of Bollinger Bands with supply and demand and how you can make that into a full working strategy. So now we've gone through a couple of indicators. There are many other indicators out there that you could use and apply to this type of strategy. If I was just to go into indicators once again, we have many different indicators you could use. You've got volumes as well. You've got the awesome accelerator oscillator. You've got fractals. That's another one if you want to understand the use of fractals. Fractals is a great way to understand the way the markets move. Now, if you want to learn more on fractals, again, just leave a comment below in this video and let me know. We can talk about the fractals and how the market can be used with a fractal nature. So that is a brief idea of how you can use an indicator that you already use with supply and demand. Remember, you need to understand when applying those areas of a supply and demand, you're going to be drawing out your zones before using the indicator, understanding with your top-down analysis, with your multiple time frame, and then applying the use of your indicator, making sure you're going in the same direction as price. Then you can apply your strategy you currently use. Now, I'm not sure what type of strategy you use. Perhaps let me know what sort of strategies you use with what indicators. That's if you want to continue using indicators. My personal belief is you want to be trading just supply and demand. It's going to be a more beneficial way of trading for you. And I've got something great coming up in a few more videos to help you even further with your supply and demand. Now, I hope you've enjoyed today's video on this brief idea of combining supply and demand with indicators. It's really just to give you the opportunity to use your current strategy you use and to apply everything together. So I hope you've enjoyed today's content, and if you have, I would love a thumbs up today on this video. It's going to help me to produce more videos, as I know you're enjoying this video. And if you're ready to carry on with your education, then you should find a video popping up in a moment so you can go through and watch the next video to help with your education.